So what are the key differences between term and whole life insurance? I see a lot of information online about this topic, but they just don't usually give you the fine details that are very important. So today I'm going to break down some of these key distinctions and really help you understand the three major differences between the two. But before I get started, understand that whole life is just a type of permanent life insurance. There's only term and permanent, but when you say permanent, somebody could be talking about whole life, universal life, variable, or index universal life. So today we're just going to call it whole life. So the biggest distinctions are going to be the duration of coverage, cost, and cash value. These are the main three. So the biggest key distinction between term and whole life insurance is that term insurance policies only provide coverage for a certain period of time. 10, 20, or 30 years is pretty typical. Yet some companies even allow 1 to 5 year policies for certain types of business loans. So for example, if you have young kids or a new mortgage, it's best to get a 20 or 30 year term policy for $500,000 or $1 million or more to replace your income and maybe pay off your biggest debt, which is now your home, while their kids are growing up, in case something were to happen to you during their childhood and your spouse can't afford these things on their own, because your income is very important at that age. And these are the most important years. Or you start a small business with a partner that, both of you put some money into this and you got some debt now and you need time to pay back those loans. You get life insurance on each other so that if one of you were to pass away in this time frame while you're building your business, the insurance company pays out tax-free money to your beneficiaries or your estate. And yes, I said tax-free. As of today, 2026, it is still tax-free. Now, when this term is over, the coverage ends because it's usually no longer needed at that point. So if you don't pass away within that time frame, nobody receives any money, but congratulations, you won. But some policies do give you the option to convert some or even all of that policy to a permanent life insurance policy. And there's even cashback options where you can get 100% of your money back at the end of that term. These are a little bit more pricey, but for some people, if it's a lower amount of coverage, totally worth it. So if you do want to keep some of it for burial insurance coverage, or you become very ill later in life and don't want it to expire, you can keep some of it with no medical exam, which is huge because most of the time you would probably become disqualified and wouldn't be able to get any life insurance at that point. So that's a huge benefit, is being able to convert some of that with no medical exam. They cannot turn you down. You just tell them how much of it you want to keep at that point. And most people do keep some of this coverage for, like I said, burial insurance. Not everyone can come up with $10,000 to $20,000 on a 3-day notice. And then some people want to leave, 50 to 100K of cushion for their spouse. God forbid they pass away a little earlier than expected. Now, with whole life insurance, these policies do not expire. There is no 10, 20, 30 year expiration date. As long as your monthly or annual premium is paid, that death benefit coverage is guaranteed to pay out at some time in your lifetime, tax-free to your beneficiaries. But you don't actually have to pay for these your entire life. That's a misconception and sounds terrible, especially in retirement. With most policies, you should have the option to do a 10 or 20 year pay, and then you're paid up for life. But these are a little bit more tricky because they have lots of options. They're not straightforward like a term policy. These have many other options that I go over in another video. The link will be down below. But basically, there is no time duration like a term life insurance policy. A whole life will cover you for your whole life, which is great for creating generational wealth or estate planning or complicated tax planning for later in life. So now let's go over the price difference, which is the second biggest distinction between the two. Term life insurance is very, very cheap compared to whole life. We're talking 10 times cheaper. For example, a 40-year-old male could qualify for a 20-year policy for $1 million at $50-$60 a month, depending on their health. $1 million whole life policy would cost that same person $500 to $600, depending on what options they choose and how they set this up, of course. And this is why most people just go with term life insurance when they're younger, because there's so much more at risk that it's easier to justify a $1 million policy to protect everything at that point, especially for only $50 a month. It's totally worth it when you think about protecting your family and your business. But the real reason for the price difference is the third and biggest distinction, which would be the cash value, which is the cash value accumulation in a permanent policy. See, whole life policies aren't just a death benefit. These policies, people use these as a super savings account, if you will, usually earning 5 to 6% a year on their dividend returns from the carrier. This keeps your money moving, which will give you some good returns over time, while also getting that death benefit for your family or your estate or your business. This is why I like to run illustrations for people so that they can really see the difference and decide which is best for them, because it's not for everybody. And not everybody is investing in a 401k or an IRA, and they might need some type of tax-free cash value in retirement, except these policies don't have penalties like a 401k and can be accessed much sooner than age 65, which is nice. I also have those details in another video, link is down below. Now, for a little extra bonus content, it is worth noting that some of these term and permanent policies come with living benefits, which means you can actually use a large chunk of your death benefit while you are alive. So if you were ever diagnosed or treated for a chronic, critical, or a terminal illness like cancer, heart attack, stroke, kidney disease, or you became paralyzed, etc., you could pull potentially $50,000 to $100,000 or more out of that policy tax-free. You would just accelerate it from the death benefit while you're alive. I also have a link down below to that video because that's a whole different story right there. But this is also very beneficial because a lot of people think that life insurance is just for when you die, except it's not called death insurance, it's called life insurance. So you should be able to use it while you're alive, right? This is important because a lot of permanent policies only used to offer this. This wasn't a term thing. So you had to have a universal or some type of permanent policy with some cash value to access that death benefit. So this is a huge update, and there's a lot of carriers that actually offer this now, and the price difference can be like $20, $30. So that's a great benefit to have tax-free cash on hand. If God forbid, you ever had cancer, didn't want to pull it out of your 401k, which 20% of 401k early distributions are actually pulled out because of medical debt. So just something to think about. So I know this was a lot in a short amount of time. If you have any questions or need some comparison quotes, I have links, tons of links down below, or you can book a call as well. And then I can even just run you a quote, or you can get one down below in the link where it'll take you directly to my website and you can actually compare both on the same quoter, which is nice. So if this video did help, please hit like, leave a comment that says good or cool or quote, please. That way the algorithm can find the right people that also have these questions, because I get these questions all the time. But I hope this cleared everything up. Until the next video, let's protect what matters, and I'll see you on the next one.